We know with the new president, there are going to be a lot of changes coming up, especially in the area of taxes. I was under the impression that Trump would be getting rid of the death tax. Can you provide us with some insight on the topic?
Well, when you talk about the death tax, we're combining the two certainties in life, right? Death and taxes. So when we're talking about the death tax, we're talking about the estate tax, which means that whatever your asset value is at the time of death, there could be, depending on how many assets you own and what their value is, a tax. So currently, per person, $5.45 million is the threshold for how many assets or the value of the assets that you could have at the time of your death if you're before a tax kicks in, and $10.9 million for married people. Now, those assets, let's just say per person, $5.45 million, above that is going to be subject to a 40% tax, up to a 40% tax. And keep in mind, in addition to that, many states also have a death tax, so you'd have to add that in as well. Now, keep in mind, the estate tax has been around since 1916, so we're talking about a tax that's been here for 100 years, and it's basically a tax on the wealthy. So what do the wealthy do? They plan. And the planning that they do, and I work with a lot of wealthy families in this area, you talk about the possibilities and what the options are about where your assets can go after your death. They can go to friends and family. That's where most people would like to see it go. There's charity, and certainly a lot of people want to leave a legacy to charity. And then, of course, there's your old Uncle Sam, which for the most part is the least desired recipient of someone's assets. So what I do with my wealthy clients is we use trust, and there's many options in terms of how you can move your assets around to either lessen or completely get rid of the impact of a death tax. Also, there's gifting programs that we put our clients on and how they could start to give away their assets during their lifetime to also lessen the tax. There's allocations to charity. I've said many times, it's good to give. It's even better to give when you get a tax benefit for it. And then there's also the use of life insurance. So these are the vehicles that wealthy families use in order to lessen, or as I said, eliminate paying any estate taxes. But the point of the matter here is that without planning, proper planning, it could really lead to substantial taxes upon death.